Hello, once again, this is Josh Belk with Belk on Business Podcast. Today we're going to wrap up, I don't know, probably been 6 or 7 weeks now, talking a little bit about this one big beautiful bill that was passed into law the early part of July. And all I'm going to do today is just kind of run through kind of a summary of the individual and business areas. This is not at all inclusive, but I want to kind of just run through this. Kind of one of those areas if we begin to move here into the third quarter that you begin to kind of have in your mind maybe some areas that you need to consider when it comes to the tax preparation process, or maybe some things that you need to do before year end in preparation for next year. So just get a real high level summary of the one big beautiful bill in the individual and business section. So the individual, these are the areas some of the areas that were addressed, kind of the ones that are maybe most talked about areas as it relates to the bill. So the expiring tax bracket changes made permanent with an increase to the inflation adjustments for the lowest 3 tax brackets. So if you remember when the Tax Cut and Jobs Act was passed, it essentially lowered most of those brackets that we see in our tax brackets. That now has become permanent. And then also with inflation adjustments increased for some of the lower tax brackets. Standard deduction increase is permanent with inflation adjustments. Which means that the personal exemptions will be permanently excluded as well. So when I say this, it may be kind of one of those situations to where a lot of times it may be pointless to even claim someone on your income tax return if you're not going to get a child tax credit because there may not be any sort of a benefit on the exemption side. So kind of that, hey, can I claim this part? That's going to be kind of a little less of a conversation now going forward. Temporarily added a senior deduction of up to $6,000 for each qualifying individual. A temporary increase in assault deduction up to $40,000. And so each of these topics I've talked about a little bit more length in most of these I've talked about a little bit more length in a previous topic. The child tax credit remained permanent. There was a lot of back and forth even during the campaign last year about the child tax credit. Well, that's been made permanent. Itemized deduction changes are also made permanent. Increase in the AMT exemption is permanent. And there were modifications of the thresholds. It instituted a 0.5% floor on itemized deductions for charitable contributions. This is one area I haven't heard talk about a whole lot, but there is a 0.5% floor for itemized deductions for charitable contributions. But there is a $1,000 or $2,000 above the line deduction for charitable contributions. Okay. So if you remember back during the pandemic, that there was this, they allowed for kind of front line a little bit of a deduction for charitable contributions. That's back, but it's $1,000 for someone who's filing single, $2,000 for joint filers. There was some repealing of some energy credits from the Inflation Reduction Act that was passed here a few years back during the Biden administration. And so some of that was repealed, mainly the electric vehicle and the residential energy credits were either eliminated or severely modified. There's a temporary reduction up to $25,000 for tip income for individuals that work in an industry that customarily receive tips, and that list will be forthcoming as it relates to the profession that generally would be included. There's a temporary deduction of up to $12,000, $25,000 for joint filers for the premium portion overtime compensation. So that's the overtime component, not the wage-based component. So the kind of that half if you're getting paid 1.5 times your ordinary salary. A temporary deduction for auto loan interest, regardless of itemizing for purchase of new vehicles with final assembly here in the U.S. So if you purchase a vehicle has final assembly here in the U.S., then it falls on the list. There can be a deduction for that auto loan interest. And then there's been a changing of the rules for the premium tax credit, child tax credit, and the earned income credit. So those, the premium tax credits related to the health insurance exchange, the child tax credit, as well as the earned income tax credit. So those are kind of the big areas that were changed on the individual side. We did mention in a couple episodes about the estate tax being increased to $15 million starting in 2026. And then, so businesses, kind of run through a real high level, the changes in business, permanent restoration of immediate expenses for domestic R&D or R&E expenses. This is one area that there is still a ton that we're waiting on to get clarity on. And so hopefully by the time we get to the end of the year, we're going to have some clarity on this R&D, these, how is this going to be handled? Who can take it? There's just so much to be worked out on. So this is kind of one of these things that we're simply going to have to wait for a lot more information. Permanent restoration of 100% bonus depreciation for certain asset classes. I think this more than anything impacts most of our clients. Many of our clients are real estate, if they're real estate professionals, and they qualify to be able to take the additional losses and depreciation above income. And for them, this has been absolutely invaluable and will be going forward. Temporary allowance for full expensing of qualifying structures. Didn't get a whole lot of detail. Did mention it in one section of the podcast a few weeks ago. The Section 199A pass-through deduction, the QBI deduction, has been made permanent. The 1% floor on deduction of charitable contributions is made by corporation. So C Corps, for example, if they make a charitable contribution, there's a floor there. So kind of what's going to happen, there's kind of going to be a bottom portion of the charitable contribution that may not end up being deductible. And then energy and investment credits eliminated after 2027. There's a clean fuel production credit, been extended through 2030. And then there are restrictions on other credits, including nuclear production, clean fuel, carbon dioxide, sequestration, and advanced manufacturing production credits. And we don't have too many clients that receive these, but if you happen to be listening to this and you're receiving or thinking about receiving, any of these nuclear production credits, clean fuel, carbon dioxide sequestration, or advanced manufacturing production credits, you'll definitely want to talk to your tax advisor, make sure you're up to the rules and know what you need to do or what you may need to change. And then lastly, expansion of a Section 179 expensing cap. So kind of at a high level, some of the individual and business areas in the One Big Beautiful Bill that has changed. And then as you kind of begin to work toward the end of the year, to make sure you're having that conversation as to what may need to be done to be able to help increase or improve your tax position by the end of the year. So there's still a lot we're waiting for as it relates to more information, both on the application process for implementation for parts of the One Big Beautiful Bill. And then we're hoping by October, they've given themselves kind of a deadline to we'll have a lot more information on some of these R&D credits and some of these other areas, the professions as far as for the certain deductions, et cetera. So there's still a lot of information that's forthcoming. And so we'll simply sit and wait till we get that information. As the information comes in, I'll probably record another few podcasts at the end of the year as we get more absolute clarity in some of these areas. So once again, this is Josh Belk with the Belk on Business podcast. Hope you got something out of this podcast. If you haven't subscribed already, please consider doing so. Have a wonderful day.